Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman. He's the derivatives portfolio manager at PI Financial in Vancouver. His websites, pifinancial.com and polarfuturesgroup.com. Happy New Year, Drew.
Happy New Year to you, Jim, and thanks for having me on.
Drew, what's the one market you think will be the most important for people to watch as we head into 2020?
Oh, that's a great way to start. I mean, there's always so much that you can watch as you head into a new year, but a market that maybe I'm a little bit more on the fence on, and why I think it will be so important as we go into the new year is because it's so important to all other markets, and maybe a bit of a scapegoat to go with this one, but I think the U.S. dollar here. So the U.S. dollar isn't that much stronger than where we were at the beginning of last year. We had a fairly steady uptrend through this year, but we're right at the bottom of that trend now. And it looks like the U.S. dollar could possibly be turning lower on a technical pattern. However, some of those signals are coming out of market price that we're getting during this thin holiday period, as we had both Christmas and New Year's coming up on a Wednesday. So it's been pretty thin trading throughout some of the off days during this last week and a half or so. So whether or not that price action is true price action that we should be taking a cue from, we'll know more as we go into next year. But maybe that's why I think that's the key market to watch, is it's right at a point where it could either break down further or it's right at the bottom of a range, and I would expect it to rally again as we start to go into the beginning of next year. And it is also just so important because it impacts the price of so many other things. So when the U.S. dollar was at its high at the beginning of September on this year, we had commodities at its low, and since then we've had a fair number of commodity markets stage a very strong rally as we went into the end of this year. So if the U.S. dollar is going to be heading lower, maybe that allows that commodity run that we saw in the last couple of months to run that much further. Or if the U.S. dollar does better, maybe that commodity run gets stalled out a little bit. But I think that's going to be one of the keys for me to watch. And we should know within the first couple of weeks of the year which way we're going to see that go. So that's the one market that has my attention front and center.
If the U.S. dollar is stronger through next year, does that mean things priced in U.S. dollars need to go lower? No, I try and describe it as the U.S. dollar, especially if we're talking commodities, is sort of a headwind. So I always like to see how market prices will react under the influence of either certain news events or a strong U.S. dollar for that matter. So commodities as a whole have been in a bear market for years. There have been little bounces, but maybe it looked like some of the commodity markets were having some multi-year lows as we were going through this year. But if we start to see those prices do better, as we have the last few months, and they were to continue to do better in the face of a strong U.S. dollar, that is, even though the U.S. dollar is going higher, they're still able to go higher, I think that just gives you more confirmation that those markets are strong. They can go up in the face of a headwind, which is a stronger U.S. dollar. So I don't necessarily think that the U.S. dollar is the be-all and end-all. It is a big factor in determining trends, and especially in the commodity space. So I will watch that closely, but to me it doesn't mean that commodity prices have to go the other way. If anything, if they continue to stay strong and the U.S. dollar is getting stronger, I think that just shows that market has that much more strength. And I would highlight that with some of the gold action that we saw this year. Gold had some of its bigger moves to the upside, while we were also seeing the U.S. dollar do better as well. So gold did sort of consolidate here over the last couple of months, but again, recently broken higher. Again, I would highlight it's been in thinner trading, so I'm watching this recent move in gold closely, and it has been on a weaker U.S. dollar, so that helps gold rise up more than it maybe would before. But again, if we were to see a strong U.S. dollar and strong gold, then that would tell me that the gold market strength is just that much stronger. So it doesn't have to mean commodity prices go the other way, but it is a key input for it. And again, a telltale sign, but like I say, so it's sort of like a headwind, so it doesn't necessarily mean things have to go the other way.
Has Canada been good or just lucky that the Canadian dollar has hung in around 75, 76 cents?
Well, the Canadian dollar has been incredibly boring throughout the year, and depending on who you are, that's either a good thing or a bad thing. If you're doing cross-border trade, it's been great. It's alleviated a lot of uncertainty. I mean, throughout much of the year, we've been in a very tight range throughout this year. I don't think we've been above 77 cents, and for the most part have stayed above 74 cents and mostly 75 cents. So a very small range compared to historical levels of where the Canadian dollar trades throughout the year. I think it isn't necessarily being good, bad, or lucky. We have had some great economic data as far as the employment numbers go. As far as manufacturing growth and business growth hasn't been as robust. But I think one of the key things for me, even though the interest rate differential between short-term paper in Canada and short-term paper in the U.S. has moved significantly in favor of the Canadian dollar hasn't really responded to that interest rate differential. But for me, it was more not is Canada strong against the U.S. dollar. It was the strength that Canada had against other currencies around the world. And I think part of that was that the U.S. dollar and the Canadian dollar were seeing the same sort of flows. So that is flows for safe, sovereign paper with a relatively high yield. And what I mean by that is you're going to be getting negative interest rates on any sovereign paper in a lot of European countries. So if you need something safe that has a positive yield and a relatively high yield, especially relative to negative, you're going to see flows coming into Canada, coming into the United States. So I think it was one of the reasons for having such low volatility in the Canadian-U.S. exchange rate was you had a lot of the same forces that were acting on the U.S. dollar, also acting on the Canadian dollar. So you had a muted reaction between those two because, again, I think they were moving for a lot of the same reasons. So I think going forward, we're at a little bit more of a risk of things possibly slowing down here in Canada and the Bank of Canada having to react. And reacting in cutting interest rates, and that's one thing that helped Canada stay so steady last year, is as all the other developed worlds their central banks were cutting rates, you had the Bank of Canada just sit on their hands and stay steady. And again, that was allowed to happen because we have an inflation rate that's close to our target, and we had a fairly robust employment numbers as we were going through the year, and GDP held in fairly steady as well. So it's been a confluence of things were okay. Our central bank, outperformed or stayed more hawkish than other central banks. And the U.S. and Canada, I think, were getting sort of moved by the same sort of factors that were keeping the U.S.-Canada exchange rate very muted.
We'll have more with Drew Zimmerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway.
Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, given the importance of oil for the Canadian economy, what's your outlook for crude as we head into the new year?
Yeah, oil has been one of the commodities that's done very well over the last 3 months. We've rallied from lows of around 52 up to highs of around 62 just recently. But again, oil has been largely in a fairly tight range this year compared to other years. Obviously, the bigger sell-off at the end of 2014, also last fall, everybody remembers quite dramatically as oil prices really fell off from $75 down to almost $40 around Christmas time when the equity markets were crashing as well. So the fact that oil this year has largely been in a, call it a $65 to $52 range is again a little bit muted. There's been a lot of factors influencing that. I think one of the main ones has been sort of the backstop of OPEC willing to come into the market to cut production, to say that they want stable prices as they go forward, as Saudi Aramco went and launched an IPO that just took place at the end of this year. So as far as that being their goal, you could say, yes, there was choppy weeks and choppy months, but relative to years past where we've had large swings in the oil price, we've seen a very stable oil market. And my view on oil is going forward, I think we could see this rally that we've seen in the last couple of months continue. We might be a little bit long in the tooth near term where a consolidation period or a bit of a pullback might be necessary. But I think as we start to go into 2020, the thought that the U.S. shale plays especially are just going to continue to pump out this monstrous amount of crude oil that is sending the global supply-demand picture into oversupply isn't going to be there. I don't think the shale companies have the capex this year. Their share prices have done quite poorly, as we have seen with some of our Canadian energy names over the last several years. Very unloved. So if they don't have the money to go out and drill all these new wells, the shale plays especially have a fairly high depletion rate, so that if you're not always going out and drilling new wells, it's a lot of work just to maintain the same level of production that they're at now, let alone increase that production level dramatically. So I think if we start to see the U.S. supply picture moderate and or even come off a little bit as we go into the beginning of next year, if we see this global rebound that we've had sort of since the trade war has resolved itself to some degree. Some of the global manufacturing PMI numbers have started to stabilize after heading down for anywhere from sort of 12 to 16 months. If those things sort of stabilize, that helps the demand picture quite dramatically as well. And again, I think that just starts to change the supply-demand dynamic. So I don't expect it to be a market that just takes a tear to the upside, but just as we've seen in the last 3 months or so, where it's just been a gradual higher oil price, then I think we can see prices continue to do better. And then, of course, just recently, when we're talking about oil, we also have to take into account for any geopolitical events. So just recently, we had the U.S. launching some attacks in Iraq and Syria. That geopolitical tension can dramatically change the price of oil overnight, as we saw when the Saudi facilities were attacked in the beginning of September. Oil prices were up sort of $10 as soon as they opened the next day. That sort of thing is always a possibility in the oil market and something that you need to be aware of. So even just these attacks happening by the U.S. Or these strikes, I should say, that to me means there needs to be at least more of a risk premium that's kept in the price of oil. So that's another bullish factor I think that we have as we go into the beginning of next year. So again, I'm looking for a bit of a consolidation or pullback at the start of the year, but my medium term outlook on crude oil remains fairly bullish.
We'll have more with Drew Zimmerman right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Drew Zimmerman. Drew, given that the outlook for oil is kind of positive going into the new year, does that mean the Canadian dollar will also go up?
Yeah, that will be interesting. I think, as I mentioned earlier, with regard to the U.S. dollar and Canada, that interest rate differential that really used to be very correlated to the U.S. Canadian dollar exchange rate sort of lost its effect as we went through 2019. And I would say that oil has really lost a lot of its tight correlation recently with the Canadian dollar as well. It used to be very correlated that if oil was going to have a strong day, there was no way the Canadian dollar would be lower, and it would be up through on a magnitude of that strength as well. So the fact that we've seen over the last year where the Canadian dollar and oil aren't always trading the same direction on any given day, and even a recent run of strength in crude oil doesn't necessarily mean that Canada will follow over a weekly sort of time frame. I think it will still help the odds of Canada continuing to do a little bit better, but it's not maybe as important as it used to be. Now, I say that with a shorter time horizon, where if it comes back into a tight correlation trading arrangement with the Canadian dollar, then I'm more than happy to keep a closer eye on it. But as I watch it now, I think the overall forecast, and again, because I'm not forecasting, or I don't think that we could see crude running away or screaming to the upside, then if crude oil continues to do better, it will help Canada, but I think only in a marginal sense, where I also think we're seeing some of the international players in the energy space take a step back from the Canadian energy sector, and I think that has had an influence on the Canadian dollar. So even if oil prices are doing better, there's a constraint on Canadian energy to get it out of Canada. So it does help what is flowing already have higher free cash flows and higher profit margins. However, the fact that we don't have anything near term that's going to significantly increase the value or increase the volume, of exports of energy that would dramatically help Canada and help the Canadian GDP. I think that's what sort of muted that correlation more than it has in the past. So again, that's open to change as we go through this year. If some more pipelines were to get okayed, or if pipes were actually getting put in the ground, that could give the Canadian dollar a higher correlation with the crude oil price. So that's going to be something to watch going forward. But right now, just because I'm bullish on oil doesn't necessarily make me bullish on where the Canadian dollar is going to go.
Drew, thank you so much for being on the show, and all the best for the new year.
I wish you a happy and prosperous new year as well, Jim.
My guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. If you have any questions for Drew or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Happy New Year, everyone.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.